Hey guys, how's it going? Welcome to this slightly belated watch list breakdown. Apologies there was no watch list on the weekend. I ended up getting pretty ill, kind of been out of action for a few days. Still feeling pretty ropey, but hopefully should be able to get through this. So essentially what I was thinking to do instead is just each day this week, each evening, just do a review of the two sessions of the day, London and New York, go over the price action on euro dollar, and then obviously do a forecast for the following day's session. If I am if I am feeling a bit better by Wednesday, I am due to be out of office, so I won't be able to do the breakdown on Wednesday evening. So what I'll do is basically do one every night apart from Wednesday, so Monday, Tuesday, and then the Thursday, and then of course Friday will just be the weekend one, which I'll release at some point on the weekend. So slightly different from kind of how we usually do it, but hopefully you guys can still get some decent value from more of of a daily breakdown this week. So let's take a quick look at euro dollar on the old higher time frames. No, we rarely ever look at it, but it is kind of it is worth looking at the monthly chart just to see kind of what's going on. And really, in terms of defining structure, if we actually take it even a further step back on this forex.com data feed, it's not great because it only goes back to 2006, but let's just work with the data that we've got. Then for me, the monthly chart is still bearish, and we're very much still playing within this overall larger range. But again, I'm not going to worry massively about that because I'm not really holding trades for that kind of length of time. What I care more about is just are we in any immediate strong supply or demand zones, really, just to give me a bit of a more of an indication, I guess, of maybe where weekly high lows or lower highs may be forming, rather than I don't care if I'm trading with or against the monthly trend. So if we kind of focus in more of this more recent monthly price action, we are coming off this monthly supply zone, and this is kind of really what I'm more interested in at the moment. When we take a look at the weekly, is because if we are kind of playing more within this range, and I guess it still is important overall, we are still long-term bearish because we didn't for me, the reason why we're still bearish is because we didn't close below here, which means that this is still the swing high and it wasn't over here, right? So that was just a run on liquidity, just to have a steeper pullback, pretty much mitigate the EQ of that prior range. All right, so long term, the monthly chart is still bearish for me, and we are coming off the supply zone. Now, looking at the more sort of minor price action, we did make that higher high and higher low, and we had a bounce off demand, but just like the weekly demand in that area, it failed to make that higher high. So really, probably from a monthly chart perspective, it's looking like these lows may potentially go. Now, if we do get a spike below the zone, or ideally a close below, what will that then do? That will then cause a monthly flip zone, right? Because what we had, creation of demand, pull back into that demand, tried to make a higher high, it failed to do so. So then we'll be looking for a break and close below that reaction. What caused that break and close below the action? Potentially this area up here. Well, then we could look for something like that, right? A bit longer term, but that's just kind of a quick breakdown of the monthly chart. But kind of the more important point I was trying to make essentially was that we're coming off this monthly supply zone right at the top of the range, right? And what that may mean is that because we're still bullish on the weekly chart, it's just kind of preparing ourselves for the possibility that we may be switching bearish. So the last few weeks or even a couple of months now, really, we've been looking to see if we would get any sort of decent bullish reaction off this weekly zone, but we always knew it would probably just be a short-lived reaction. Why? Because it was a weak structural low, because it never took out the high, right? So we were always expecting it to get run, but it's still worth us, potentially looking for that bullish bounce, even though it ends up just being basically one week's worth of price action, right? One bullish candle, because from an intraday perspective, if you're looking to enter with even less than 20 pip stop, right, you can still make a decent bit of R out of that. But then what ends up doing with this candle here on the week of the 9th of August is creating that perfect double bottom, right, getting those people getting long, and then we've now swept that and used that for liquidity. So for me, this zone is obviously clearly no longer gone, and we've pretty much closed below this low now. But with all of that said, right, we just blindly assume that the bullish trend will continue until it doesn't. So still expecting this to be a strong low, still expecting this to be a weak high at the moment. At any point, that weekly high low could kick in, right, to take out this high, especially now that we've had a run on that low. That may be enough liquidity to now at some point within the next few weeks fuel that move for us to target that high. But like I was saying, because we've come off weekly supply, very prominent weekly zone as well, won't be too surprising if potentially we switch trend, but until that happens, I'm running with the assumption that we've now swept this low, and longs could be on the cards. But because all we've looked at so far is weekly and monthly sort of higher time frame outlooks here, we can still be pretty aggressive even by just waiting for the daily, right? We don't have to suddenly start looking for 15-minute changes of character and then trying to swing this up. Of course we can, but literally at the moment we could just wait for this daily high to go, and then we can start going, okay, now let's start to look for those longer term moves here, because until that happens, this can still be a very high probability area to look for daily shorts, right? And then target the next week low, so on and so forth, until we get that change, until we get that daily change of character or that daily trend change, right? And then we can start talking with a bit more sort of seriousness about some targets up towards the top of the range, or potentially even higher, right? So yeah, from a daily chart perspective, we obviously had the equal lows were pretty obvious there as well, and we started to get that move away, but we never even swept that low, even by a pip initially. So that's what massively increased the probability that it was a fake move. It was just a daily pullback up into this level, and now we've got more of a solid close below, and we're already starting to retrace straight away after filling up more orders, or I should say hitting more orders within this sort of FU sweep zone, right? It's not the cleanest of candles, but essentially it took the liquidity below both of those equal lows, which then fueled that move to the upside. We did initially have a really nice reaction from there, but this is a massive wick in and of itself, so there's obviously going to be plenty of demand within here. I'm obviously getting nearer towards the EQ of that wick, which we haven't perfectly tapped just yet, but we don't really have to. I don't see that as something massively significant. So yeah, we'll dive into having a little look in this wick in a minute as we jump down the time frames, but purely in terms of the daily, we're obviously bearish back in June, and then we had this pullback here. Now at the time I was viewing this as a daily pullback, right, and then viewing that as a lower low, and then I viewed that as a daily break of structure to the upside. But now, as we can see with the benefit of hindsight, being a little bit more conservative with our daily swing structure would have ended up being a bit more accurate, where essentially this just ends up being a run on liquidity, right, whether you just view that as the high there or that trend line liquidity there. As we can see now, that was the true daily pullback to then form that lower high and that lower low. Now again, this isn't the most sustained daily pullbacks, but it's quite a sharp movement back up, pretty much to the EQ of the prior high. So for now I'm counting that as a decent daily swing high, and if we were to get a break up above that daily high, I'll be viewing that as a daily high and then looking for those longer term moves there, or potentially we may get an initial reaction, right? Price may come down a little bit, and then if we get the push up, we'll have a flip zone, and that will be even nicer as well to then take that potentially up higher. But until that happens, until this high is breached, until it's closed above on the daily chart and also the 4-hour chart as well, I'm going to be looking for pretty high probability shorts to take this down to at least this low here, and then potentially look for another sweep and see if we get that move, or leave a little bit of volume remaining on the trade and see if we are going to get that long-term weekly trend change there. So yeah, that's pretty much how I am viewing the daily chart. So let's have a dive down into the 4-hour chart. So yeah, we spoke about this I believe in the last breakdown, where a few weeks ago, before around the start of August, I was initially viewing that as a 4-hour lower high, but I'm kind of switched my approach just a little bit now in general, just being a bit more conservative with my swings, and this truly is just a bit more of a minor pullback, right? Really, we were playing with that high there and that low there, so then we had that minor break of structure here to the upside, which then just gave us that indication that we were having that steeper pullback. We almost hit the EQ was around there, we just missed it, and then that was enough for the lower high to kick in and get our break of structure. Now in that whole meantime, when all that price action occurred, what did we have? Well, we had this supply zone here, right? Price came into that supply zone, it tried to form a lower low, it failed, and we got that another minor break of structure to the upside there, right? There's the true minor break of structure there. This is more of a substructure break, really. And then we got our flip zone. So then when price came back down, we were looking to see, would we get a potential bullish reaction from here? But the overall trend took over, the low high was in place, and we ended up smashing through. But that's okay, keep building the story. What do we get? Well, when price came into demand, you can see that small reaction there for then price to actually come down and then cause this demand down here to fail. So that's how we knew there was some strong supply in this area, right? With those I always get this confused, those buy to sell wicks, that's the right way around, yep, buy to sell wicks, which is essentially just showing an M15 potentially supply zone in that area. Price did mess around these lows for quite a bit until we had some news, which then price spiked all the way up, perfectly mitigated those orders within there, which then ends up being enough supply to then push price down a little bit lower. And now for me, we are playing within this 4-hour bearish range, which is pretty much the same as the daily chart. So you can see the EQ of the range is marked out here, and we've just poked above that today. So longs are becoming even lower probability now in terms of being in the 4 hour and daily premium, and against the 4 hour and daily trend. I did have the wick of this 4 hour drawn on, just to see if potentially that lower high may form here and come lower, but as we can see we've spiked up, so that's enough for me to count that supply zone as failing. But yeah, we'll dig into that a little bit more, and then let me just get rid of these lines here. Just purely in terms of the 4 hour chart, what other price action did we have sort of this week? Well, we came down, and then because we came up, and then we just spiked the low. Because I'm happy to use wick breaks as mapping for changes of character, that means that because we spiked to the low, that means there must be a high here, and then we came up and then we took that high. So for me, that counts as a 4 hour change of character. Just giving us that indication that price may be moving back up to the upside to start that deeper pullback. So now that we are above the EQ, longs, those counter trend longs are becoming lower probability, shorts are becoming slightly higher probability. I would ideally like to see price come up towards around this region, especially nested within that overall daily demand zone there. Now what I want to just quickly do is just, sometimes I'll do this, right? If we're in a large big higher time frame zone like this, I'll just draw down what did the lowest point react off, right? And then we can go scroll left and investigate and see, does it make sense? Or potentially, has it just reacted off something that's just a decisional, right? And we're starting to see that daily move away now. Let me show you actually what I mean again. Let's go back to where we are, all right? Because if I look left, where we're going to look in a minute, I appreciate I'm jumping around a little bit here. It doesn't make total sense. But if I look left, which we'll do in a second, and I see that price has come off something that makes sense, but potentially there's like a really clean zone down here, right? What that may mean is it can maybe give us a bit more information that, yeah, we might be likely to reject here, and price will want to come lower to mitigate that liquidity before potentially we're going to see that, right, that daily trend change and that weekly higher low form if the bullish weekly trend is going to stay intact, right? So if we do scroll across on the 4 hour chart, what do we have from just pure 4 hour price action perspective? Well, we obviously have the the whole sell to buy, which pretty much is that daily candle, right? That would be that daily candle there, which we then refine to the wick, which we can see here. But then if we try and refine the 4 hour candle even more, ideally we'd be looking at something down in these wicks, right? Even if we just took literally that whole section of both of those wicks. But as you can see, we've come off this candle here. Now, the reason why that makes sense is because if you were to refine your 4 hour zone, right, it should be, really the last sell before the buy for demand. But as we can see, if we draw it on that candle, right, that candle wasn't engulfed. Now, you don't have to be super strict and say that it has to be the candle that engulfs. You could just leave it that way, or you always want it to be the sell to buy for demand, or buy to sell for supply. However, we do know that it can also be very effective if you do refine to the next candle that is the one that is engulfed, which would be this candle here, and we can see we pretty much perfectly mitigated the EQ of that candle. So yeah, it makes sense, but I would still be aware in the back of my mind price could come lower to mitigate something within those wicks. So if we take a look at the 15-minute chart and let's see if it makes sense what price has rejected in there, or if potentially price would be coming lower, right? So let's just get rid of this box and take a look. So if I look for the flips, well, there's kind of two ways you can do that here. One would be taking the whole buy to sell range, which, as you guys know, is something I'm doing a little bit more often now, kind of rather than always looking for the refined candle. I'm more than happy to look for the whole range and just see where the reaction occurred. Well, we can see the first reaction to that range was this move here, right? And then that's where the reaction came in, and then this is where it failed. So ideally, I'd love to see price come down to this level here, pretty much counting this as kind of all mitigated and not that relevant. And this is where the true demand stepped in to initiate that entire daily and weekly run there. So I am aware now in the back of my mind price could come lower. And then what do we see? What did price actually react off? Well, it reacted off this wick here, right? So it's basically these candles here is the demand, which then makes a bit more sense if you were to refine to this candle, then you're gonna have to refine it to the wick, and really it's that. So it's something lower than the 15-minute time frame, which is where that failed reaction has occurred. So it's kind of one of those ones. Yeah, I mean, it makes sense, but it's nothing to me amazing. I would probably love to see price come a little bit lower and then really look for that reaction off there if and when we get that. But yeah, it's probably a little bit later, further down the line. So that kind of wrapped up the 4 hour chart. Let's take a look at what's going on the 15-minute chart. So yeah, when we were messing around that sort of 4 hour and daily low there towards the end of last week, we did get some volatility as pricing spiked up into that 4 hour buy to sell wicks, which we can even see here on the 15-minute chart was also just wicks as well. So that was probably a 5-minute zone or something like that. and then we broke this low here, and then for me that was just a small minor pause back, and then we continued to move down. So this is currently the 15-minute range that we are still playing within, right? Because we never closed below the low and we never closed above the high, right? We just kind of had a change of character down here. The price came down on, I believe this was Friday, right? Took this low, which means this was that high there. We then got that change of character after the sweep, and then we pulled back down into demand. Yeah, I believe there was a beautiful entry around that time, which we'll take a look in a minute. And then we came up. Really, this is a bit more of a minor break of structure as we took this high here around Asian session, and then we broke up. Yeah, pretty much to see this week's price action so far. So we have had a bit of a flip zone here, which you can see I've drawn on this candle, which would have been that reaction to that supply zone and broken up. So potentially something we can look at in the future, but the trend is pretty strong at the moment on the 15-minute chart. Now we came up in towards this wick here on the 15-minute during London, and we did have that change of character to the downside. So I'll tell you what, before we go through all the 15 minutes, let's have a look at the intradays at the same time. So essentially all of these trades, really it's just looking to play the 4-hour and daily pullback, right? Because what do we expect after a 4-hour break of structure? We expect a 4-hour pullback. We've now had that 4-hour change of character, but there was also obviously a 15-minute change of character that happened earlier to look to start to play that pullback back up into premium prices. So let's have a look and see if there was any sort of nice way to get back into this pullback with that first 15, not the first, but the first change of character after we had that failure to form a lower low, right? Run on liquidity, break of structure to the upside, get that change of character, and we pull back into this demand level. So looking at the M1, it's not the super cleanest in the world. Probably maybe would have looked for price to come a little bit deeper, because obviously that's not the cleanest demand zone. But you know, the entries are there, so let's have a look at them. What do we have? Yeah, it's not as clean, because essentially the way you kind of have to view that if you wanted to get in early was this 1 minute candle, right? Essentially being your 15-second supply zone. So then when price comes back into it here, reacts and it breaks up above, right? You're trying to read it on the M1 how the 15-second would look, and then that would be your entries there, right? But let's just stick to the M1 for now and potentially see some other ways. So take the whole buy to sell range, right? Where's your reaction? That would be your reaction there. So then it reacts, fails, right? And as soon as it comes back in anywhere here, it would then be your entries, right? And then you can get in long, and then you're in again. Or potentially, if you don't take ranges and you only use refined supply zones, right, 2 single candles, then that would be your entry there, right? So you'd have entered on that being the reaction failing, and as it comes back in, let's see if you would have got away with a 2 pip stop. No, so you probably would have taken a loss there, unless you'd entered on the EQ, then potentially may have stayed in, but then you most likely would have taken a loss there. So this is kind of one example of taking the range can get you in a bit earlier and give you a bit more protection. So yeah, I mean, I really liked the way that ran the lows there, and then we got that 15-minute change of character. Like for me, that's pretty much perfect. A perfect way to get good confirmation to start to play that sort of higher time frame pullback, right? You really let liquidity build, right? It's not going to happen straight away, right? Even though we get changes of characters over here back on the 19th, which I believe was Thursday, you can very much definitely start looking for longs, but sometimes you kind of have to manage your expectation that, you know, we're not always just going to get that instant pullback, and sometimes it can take a couple of days of building that liquidity. Then when you see this, it fails to kind of form that lower low, big movement up, right, or that vertical movement back up, nice change of character during the New York session, and then yeah, looking for those entries down here. But yeah, it's a little bit tricky because this wasn't the cleanest of demand zones, but yeah, the entries are there nonetheless, and then it really started to take off going into the weekend close, and then obviously we broke up through Asia, continuing that euro dollar strength, bring us up into around the London session this morning, where we had this big nasty wick, but we're kind of right up until where you know, if the 15 minutes can remain bearish, this is where that 15-minute swing lower high needs to start forming. So this is kind of first real only clean thing you can really draw on the 15-minute, unless you start diving into this wick in the lower time frames and see if there's a clear zone, which we'll do in a minute. So as price then comes up into this 15-minute zone during London, you know, you can wait for a 15-minute change of character to be a little bit more safe. So that would be this low here that I've marked, right? Because that's the first minor pullback, or the nearest minor pullback, I should say, for price to come down and break. And then as soon as we get that change of character, let's take a look on the M1 down here, because this, I believe this was around Frankfurt Open. Yes, so London not even open at this point. And yeah, what do we have? So we have this is kind of the last area that needs to hold. This would be the last reaction before the low gets taken. So essentially you can take the whole M1 range and see which bit price then reacts to. Hang on a second. Have a look at this. This is a little bit messy, this setup. So we come into supply. We react, we push down, so we also get that 15-minute flip and change of character, which is nice on the 15 minutes. That's where you can see price then spikes up into the buy to sell supply, right, with these wicks here to then fuel a little bit more of a move. So I'm just trying to see how you could have potentially looked at this in the M1. This is not really great price action as far as I can really see here. Yeah, there's nothing I like there, to be honest. No, potentially you might have yeah, there's a 5-minute flip there. It's not great. Let's draw it on. Because really you've already had a reaction there, but you get another one here, then it pushes down, it comes into that supply. Yeah, it's not the best. Just kind of just trying to see if logic would have led you to this candle here, but not the best in my opinion. You do get another one here, but I don't really like entering trades this low at this point because you've had all of this run. You know, arguably those M1 pullbacks have all been mitigated because, you know, this pullback here mitigates that. Then you're playing within this range and this pullback here mitigates that. So potentially everything's, you know, already been mitigated above. So that's why it can give you more confidence to then play these decisional ones that are a bit lower down in the run. But yeah, this is kind of really clutching at straws. It's not really the way, yeah, that I like to trade, to be honest with you. There's nothing there that I really like. You know, arguably then this range has now been mitigated with this pullback here. So then you'd be playing within this M1 high and then sort of this M1 swing low. But yeah, there's nothing I'd really want to trade there. So yeah, I can't really see anything during London that would have, unless I've missed something, I can't really see anything too clean there for me personally. Then what happens, don't really reject anything too significant on the M15. I believe that would be like a 10-minute demand zone there, but then we start to shoot up and just continue that move, right? And then we come up higher. So this is where I would then be looking in this wick to see is there anything in there on a lower time frame that makes sense. So if we then look across here, you can already guess by the size of this red zone, right? M1, massive inside bar, and then it's just another wick again. So yeah, it's not looking very, very clean at all to try and decipher potentially where price may react from and form a M15 low high if it is going to in this area. So what you can do is just draw that general area and wait for the order flow to switch bearish again. So we're going towards the London low, remain bullish the whole time, right? Making these swings in price action, and we get a nice run on liquidity. And then yeah, in terms of M1, it's not massively clear. But you can see here, right, this is where I prefer taking the whole range because you can see that that is your sell to buy range demand. Price comes in, that's the first reaction, and then you get the change of character and the fail. So then on the 15 seconds is essentially what you've just read in the price action, and then that's a really nice short there to then take. And then let's take a look because there was another short entry where we go up. Scroll over on a 15-minute, where essentially you get an M15 flip as well because you have your M15 demand here, right? Price then comes in, it reacts, and it pushes down, and it comes back up into that supply, right? That then becomes your M15 flip zone. Hopefully you guys are following that being there. That can really just help you when you're then trying to look for those kind of moves later on in the run. Price then pulls back up into there, right? So then what you can do is, it's a little bit tricky to see this on the M1 in terms of the actual entry. Let's jump down. You've marked out your M15 flip zone, right? And you're just looking for that order flow to change. And this is where the 15 second can help a lot. Let's see. So price comes in, and then you have, yeah, so you got your last bit of demand, right? You want to refine it to there. And then price comes in, reacts, pushes down through, right? So you get that change of character as well, taking the low of the inside bar, and then price comes back into your supply, and yeah, then you're off. So a little bit more advanced, but it is there. Definitely a nice way to kind of help with those M1 continuations. It's just waiting for the M15 to then switch bearish again, just so you know that the M1 pullback is over, and obviously timing that with the M15 flip zone as well, which is a little bit more subtle to see, right? But hopefully you can see the logic of that, right? You have the M15 as a demand, right? Because it's all been bullish since we got this kind of more prominent internal high low, right? That internal M15 high low, and then all of these candles, you can see they're just pulling back, and then we get that flip and change of character down the M15, and then that helps you to time that M1 pullback, and then, you know, rather than just trying to guess where the pullback's going to end within that zone, just either wait for the M1 flip. But in this case, yeah, I mean, you can see it, right? So this is how you can read the 15-second. You don't need it. You just need to be very, very quick and paying attention to the detail of what you're seeing on the charts and not hesitate, right? Because you're not going to get long to see it. So essentially, you can see price then taps it, right? Price then comes back into this sell to buy demand. As soon as you see the reaction, right, it comes in, it spikes up, and then it comes down, right? So as soon as you get that closure below here, you'd literally have to, that's the pullback into the 15-second zone there, right, with that M1 wick, and then you're a BN. So that's why you've got to be pretty quick if you're just looking at the M1 in that case. So yeah, again, not the cleanest of trades, but it was there. Both of those would have been a little bit easier, or a lot easier, I guess I should say, to spot on the M15. Sorry, on the 15-second. There was a bit more of a decisional one here, but again, that's not really my style. I don't really like those ones that much, where if you're looking at that as the last bit that should hold. But yeah, I don't really like that much to me, for me personally. Now, what I do prefer is this, right? Because at this point, well, this is kind of a long that I really like in terms of the way the M15 price action and the M1 price action set up. But in terms of how well priced it is and where we are within higher time frames, again, it's not great. Really, I want to be looking for those longs down here, and I want to be looking for the shorts up here, right? We're starting to play within the EQ of the range, and where are we in the 15-minute, right? We're right up in the top of this wick, where we're, you know, potentially expecting that lower high to form, and looking for longs within here is a lot more aggressive. But of course, if you're just looking for those intraday entries, and you're going to be quick with the targets, as you can see in here, just targeting that next 15-minute sort of substructure high, you can get away with it. But let's just kind of look at the price action of how it's set up. So obviously price is bearish, and then expecting price to come down to around the sort of range created demand down here. It comes down, it then shoots up, and what do we get? We get that change of character, right? And this is where we have to really be paying attention to change of characters, because it can be subtle with the price action. Because we get a minor pullback there, that lower low, then we break the high there to form that sort of, you know, change of character, right? That first internal high, then price comes back down into that demand zone, wait for the M1 to switch, and we get, this is probably the cleanest flip zone out of everything we just looked at, right? We have our supply, price comes down, it comes into it, it reacts, it fails to go lower, goes up higher. We also get the change of character. A plus flips that up. Whenever I say that, especially in this case, I'm purely talking about the M1 price action, right? Forgetting where we are within higher time frame story, but purely just how the flip looks, right? That's picture perfect. And then what we can do is target that 15-minute high, and then boom, you just got over at 7R there with a 2 pip stop. Obviously could be refined a little bit further if you went down to 1.5, but 2 is more than good enough. Yeah, and then we've just been chopping around. So at the moment, you can see we have the 15-minute high there, and we've just wicked it, grabbed the liquidity, we failed to break up higher. Trading's out of session at the moment for me. Really, I wouldn't really be that keen on looking for entries unless we were in a really nice higher time frame area of value. But yeah, as I was saying, in terms of higher time frame forecast, daily and 4 hours still very clearly bearish for me. So we'll be looking for price ideally to come up into one of these sort of two areas where we have nice higher time frame supply, you know, and then look to then run these lows here. That looks like quite a weakly formed low, right? Because it's kind of those equal lows that we can then look to target and potentially come down lower into, you know, those 4 hour wicks that we're looking at, where we have that nice M15 zone within here, potentially really mitigate the bottom of that M15 sweep, and then potentially see if we're going to get that longer term weekly higher low, or if potentially we are going to switch bearish, and the euro dollar is going to break out to the downside. So if I could simplify that forecast even more, we are now above the EQ. We are back into premium prices. Those pro-trend 4 hour and daily pro-trend shorts are becoming higher probability. The 15-minute is still bearish. And this is obviously the highest probability point in which the M15 could form that lower high if it is to remain bearish. We have technically had a very aggressive change of character now, because this inside bar for me obviously counts as a pullback, right? We have broken that low there, and now we've come back up into this wick. And potentially, right, that this could be the start of that 4 hour lower high, right? We could go from here. So let's actually have a look and see if there was an entry within here. Let's delete these drawings. Obviously come up to mitigate the M1 extreme. But it looks like we haven't had too much of, you know, arguably, so it's not clear on the M1, but that would be a seconds reaction, because this would be your demand, right? Price comes into it, it pulls up, and then it fails below. But yeah, we've kind of mitigated the extreme there. So not the cleanest bit of price action there for me. But yeah, there's an entry there. Let's see if it looks any cleaner on 15 seconds or not. It's pretty aggressive, but kind of sometimes when you really like an area, then you can be aggressive, right? So like I said, if you know you're in the 4-hour and daily EQ, you're looking for a 4-hour and daily, pro trend lower high. We're at the last real point that this M15 is going to stay bearish. We've had a sweep of liquidity. We've now had an M15 change of character. We've come up into the M15 extreme wick, right? And then you're just waiting for the lower time frames to change, right? You can clearly see this one on liquidity. It's essentially that's your reaction to demand. We've then pushed down. So then, yeah, that would have been your 15-second entry here. So it just depends on how tight your stop was. So let's see how big this price action is. 2 pips looks like it would have stopped you out there. So yeah, this is one of those ones with hindsight where I'd say try and cover the high if it's that near, right? So then you'd be covered in 3 pip stop. But yeah, again, for me, it's not the greatest of trades. I'd probably, we could very easily just still come down, tap into here, and then continue up higher and make our way up into the 4-hour and daily supply there. So yeah, all I would say at this point is longs are definitely not ideal at this point. I'd probably wait and see if we get going into London, right? If we can start kind of take out these lows here, that would be really nice, right? Kind of get that M15 minor breaker structure to the downside, wait for that pull back into an M15 supply zone. And then, yeah, just start looking for M1 entries or 15-second entries, however you like to trade. And then we can start to look to target these lows here. However, if, this recent sort of intraday bullish order flow continues, right, we could go up higher. If we then get a closure above this swing high there, then for me, the M15 will still be bullish. But because we will be in the premium of the 4-hour and the daily, and it's both with the 4-hour and the daily trend, you can be a bit more aggressive in terms of just waiting for M15 changes of character rather than necessarily waiting for the for the M15 swing trend to switch bearish again, because you are trading with the high time frame pro trend, right? Hopefully that makes sense. So you can get away with it. Let's have a quick look if there's any nearby supply zones. We do have an M15 flip zone there, right? So that decisional here that took out that supply, we had a buy to sell wick reaction, so that would be another key area to look for. Then obviously we have this range here, or you can refine it to the wick, just snap it onto the range, and then yeah, probably that would be the last line of defense in terms of the M15 being within that 4-hour supply zone. So that's some nice key areas to look out for. But yeah, it would be good to see if we can target these equal lows if that 4-hour and daily pro trend is to remain. So yeah, that kind of wraps it up. Let's see how price action shapes up tomorrow, but as things stand, I definitely do favour the short. So ideally we can get a nice 15-minute minor breaker structure to the downside, and then start to look to target these these lows down here. Of course you can still take longs, but you just need to realise that you are trading in the premium against the 4-hour and daily trend. So yeah, just make sure you be aggressive with your management and manage your expectations, right? Yeah, I mean, we are coming off that daily demand. Potentially this could be where we see that daily trend change and 4-hour trend change, but until we get that confirmation, it's a bit aggressive to try and anticipate that before it actually happens. But yeah, that wraps up. I'll see you guys in tomorrow. I'll do one on Tuesday and then one on Thursday as well. So again, apologies, I missed on the weekend, just absolutely out of it. So yeah, hopefully, back feel a bit better this afternoon. And we keep going. Hope you guys have a good week, and I will see you in the next one tomorrow. Cheers, guys.